Hi, this is Ann with Finance on the Offense, and today I'm going to go over how to invest $1,000 if you're just starting out. And before we get too much further in this video, I want to say that I am not a finance professional, so everything in the video is just for entertainment purposes only. All right, let's get started. Okay, so you've got $1,000 to invest. And the first question you should really ask yourself is, when will you need this money? Will you need it in 2 months, 5 years, or can you wait 25 years until retirement to get that money out? The longer you're able to wait, the better return you'll most likely get on that money. And there are a few things that the U.S. government has done so that we can get the best return on our money and save a little on taxes too, or actually a lot. But you have to be willing to wait until retirement age of 59 and a half. So first, let's talk about that. Saving $1,000 for retirement in the stock market. And you really need to be able to wait until you're 59 and a half to pull this money out, because if you do it before that, you are likely to incur a lot of penalties and fees. So first up is the Roth IRA. With a Roth IRA, you can put after-tax money in. So this is money you would get from your paycheck that has already had taxes withheld on it. And by the way, you do have to have earned income in order to do a Roth IRA. And there are a few exceptions to that, but for the most part, you'll need earned income. Now, the awesome thing about a Roth IRA is once you put that money in and it grows and grows and grows, and then you're ready to take it out at retirement, you don't have to pay taxes on that growth. That is a huge benefit. To open a Roth IRA account and invest in the stock market, you'll need to go to a company or bank that offers brokerage accounts. So this is going to be something like Schwab.com, Vanguard, Fidelity. There are a lot of options really. And you can open a Roth IRA online. So let's go to Schwab.com and I'll show you how to do it on that site. Okay, so I'm here at Schwab.com and I'm just going to come over here to what we offer. Then I'll come over here to accounts and then retirement and IRAs. And they have some information if you scroll down about each one of these, but we're going to choose the Roth IRA. So we can just click open a Roth IRA, and then it's just like filling out any other account, and then it'll walk you through the process. All right, so after you've opened your account, you'll need to get your $1,000 in there. And there are a few ways to do that. You can transfer an existing IRA in, but if you don't have an existing IRA, you can do an electronic funds transfer, a wire transfer, or even go old school and mail them a check. Now, once your $1,000 shows up in your account, you're not done. You need to invest that money. So you'll need to buy mutual funds or bonds or index funds, something like that, in order to invest it. And if you're wanting to invest in the stock market, I really recommend doing a total stock market index fund or like an S&P 500 index fund. If you have at least 15 years until retirement, I would just go with SWTSX or VTSAX. Both of those are total stock market index funds. One is Schwab's and one is Vanguard's. You could also go with FSKAX, which is Fidelity's total stock market index fund. So you'll buy $1,000 worth of whichever fund you decide to choose. And once you do that, you've invested your $1,000 in the stock market with a Roth IRA. Now, if you start to get really excited seeing your money grow and you want to add more to your Roth IRA, be careful about that, because there are maximum amounts that you can add to a Roth IRA each year. So this year it's $6,000. This is 2021. And to find out the current year's maximum Roth IRA contribution, you can just type that into Google. Just type Roth IRA max contribution and then the year. Now let's say you have a shorter timeline and you want to get that money out at 5 to 10 years. In that case, I would not do the Roth IRA part of it. You can just open a regular brokerage account at Schwab, Vanguard, or Fidelity, or another brokerage firm. The process is really similar, but instead of searching for how to open a Roth IRA account, you would search for how to open a brokerage account at Schwab or wherever. And in this account, I would also buy just the same index funds as the Roth account. So this is going to be like Schwab Total Stock Market Index Fund or Fidelity or Vanguard. Now let's say you need that money in 2 months. Unfortunately, in that time frame, it's going to be hard to get any kind of decent return unless you're doing something totally risky like day trading. And with that, you really risk losing every penny. In my opinion, your best bet for a safe investment is a high yield savings account. And you can also open one of these online. Now, interest at these high yield savings accounts is really not that high, unfortunately, right now. Ally Bank offers a high yield savings account that gives 0.5% and no minimum balance. They compound interest daily and they pay it out once a month. But after 2 months, your 0.5% would only give you 83 cents. So yeah, not great. But it's better than putting it in the stock market, which in 2 months' time is going to go up and down a lot, and you could risk it being at a down point in the market when you need the money. And if you have to sell it in a down market, you will lose money. So a savings account is your best bet here. Now, there are other ways that you can invest your money where you might get a huge return, but those are a lot like gambling in my opinion. Some of these options are like day trading, investing in single stocks, investing in stocks with call and put options, things like that. If you don't care that you never see your $1,000 again, go right ahead. Now, I personally invest in single stocks, but that money that I use to invest in that is not something I need. So if I lose it, then that's fine with me, honestly. I have had some success with single stocks, but then I've had other single stocks that went completely bankrupt and I lost all my money. So yes, it's a bit like gambling, and I would just steer clear of these as a new investor. Alright, if you like this video and you want to see more videos like this, just hit the subscribe button and the little bell next to it and you'll be notified every time a new video comes out. Alright, thank you!